All righty, traders. This is Blake Morrow. You are listening to the Morning Edge. How's everybody doing today? Did everybody have a good weekend? Let me just get the chat box going. Everybody have a good weekend. I hope so. Alexander said the weekends tend to be very short, but did have a great weekend. That's for sure. Isn't that? I mean, it's so true. Do you know what I did this weekend? Before we get into the charts, I blew a lot of crap up. I blew so much crap up this weekend. We now that the weather's getting nice, myself and like 7 other guys went out to the desert at like 4:30, 5 o'clock in the morning. And we had so many firearms out there and we blew so much crap up. It was fun. I wish it was drizzling the whole time. So I didn't take I took a camera. I was going to actually take some footage, show you guys what we did. But unfortunately it was, it was drizzling. So I couldn't bring out the camera equipment. But man, we shot a lot of stuff. We were out in the desert. And the reason why I like to go shooting out in the desert is because I don't, and we have like outdoor ranges. I like to do it out there because you can make up your own like tactical, like little moves, because you can't do that on a normal range. These are just government properties that are specifically made for outdoor ranges that anybody can go to. So basically you're just out shooting in the desert, but shooting in a place where it's, designated to be shot. So a lot of fun. I blew up a lot of stuff yesterday. And it was so much so that my shoulder is bruised. That's how bad it was. Anyway, all right. Enough about that. I was just hoping you guys had something fun that you did this weekend, but I do want to give you guys a heads up. I am going to be out of town from Wednesday to Friday, just because I am moving my mother back to my hometown after 20 years of being away from her. So I'm going to be moving her and my stepfather back to Arizona. So I'm going to fly out there, pack them up, drive the moving truck, me personally, and then I'll be back on Sunday. So just letting you guys know, I'll be out of town for a couple of days, and that's where I'm going to be, just so you know. All right, let's talk about currencies and kind of talk about where the market is right now. First of all, before I even get into currencies, let's talk about the S&P. I think the S&P is in, some key resistance, and you guys probably remember in the week ahead video, I drew this and I said, 44.85 might be some resistance. That was actually the high overnight in European trade. Hopefully some of you guys queued into that. And I didn't, because I was sleeping. But I've got short risk trades on anyway, so it's fine. But that is going to be resistance day. We can actually take it all the way back up to 45. Oops, where's my bias chart? I thought I had it here. We can take that all the way up to 4,500. So 44.85, then 4,500. That's resistance. I believe that we still have to have a bearish outlook while we're below this broken trend line. Period. End of story. Okay. So keeping that in mind, I think support's going to be right here. So this trend line support should be significant intraday, meaning that if we drop to it, I believe that we're going to find some support. So that trend line is going to come in roughly around, by the time we get there, I want to say 44, maybe 44.20. Okay. So any dip towards 44.20 should find buyers. And that's only about 25 points away in the S&P. So just don't, I guess what I'm trying to say today is don't get too aggressively bearish risk while we're above this trend line. It does, I do have a bearish bias, but anyway. Brand said, yay, Blake to save the day by putting in the great levels. I don't know about save the day, but if I can give you some levels to cue off of, that's important. Saving the day is actually left up to yourself. You are the only one who can save your own day. Hold on one second. Okay. Brand says, yep, Ryan tells me to look for my own levels first. You know, one of the things that I've been doing the bias chart for people for almost like literally 20 years. And I always tell people, make your own first. And then because there are periods of time that I won't be here to do this with you. You know, at some point I won't be, and you know, at some point I won't be. You know, and I mean, just take this week. I'll be gone. You know, from Wednesday to Friday. That doesn't mean that, you know, Steve won't walk through the levels with you, or you know, but finding it on your own is so important. So, and building a bias chart, no matter how you build. I've been building T charts and bias charts for literally 25 years. One of the very first things that I did back in the mid 90s is like, oh, you know, I'm gonna trade the you know, semiconductor stocks, and I'd put which, you know, stock market goes up, which ones am I going to buy? You know, stock market goes down, which ones am I going to short? And then I'd identify where those levels were, and then just cue off on those, you know. So anyway, let's go into currencies. It's enough about that. All right. So support for the euro. This, I know we wrote it down last week at 116.80, 116.85. I think we need to write that down again. And if we break that, then we have what, 116.65. Resistance right there. Okay. That trend line and those highs. So that comes in at 17. I know we were writing 1750, I think. Let me double check that. Oh, by the way, did you guys see this? I got to show you something. On ForexAnalytix, on the platform. Sorry, I'm going to just reference this really quick. Take a look. I know some of you guys might be doing something, but quick look at the screen. So you'll notice right here where it says news flow. What is that? That is the Forex flow news that you see Ryan posting. Right? I'll be jumping on that, and so will the rest of our team eventually. So that's all, like, it'll be basically, I'll be blogging there and, you know, posting there. So, you know, if you follow me on Twitter, you'll see all my stuff there too, which will be nice, and some specific stuff for you guys. So that's, you know, currently in the news flow, just so you guys know. And Rick asks, yep, that was called a few different things before the bias chart. That's what was called the T chart. Yes. Rick remembers from 15 years ago, right, Rick? We'd call this the T chart. And then Steve redid this for me, and we started calling it the bias chart. So
the coffee chart.
The coffee chart.
No,
that's right.
Okay.
No. Why the coffee chart?
The tea chart, tea or coffee?
Oh,
that's bad. That's bad.
That was really bad. That was horrible. I don't even know why I let Steve talk me into to calling it the bias chart. I missed the T chart. Matter of fact, Steve, I'm going to unscrew that up, and I'm going to call it the T chart from here on out. I'm just kidding. We'll keep it the bias chart. I know Steve gets really jealous because and you guys missed this earlier, Stelios. I went shooting this weekend, and we shot a lot of stuff. 117.60. I
shooting as in a gun, or shooting with the photo?
Yeah,
with the camera.
No. I'm sorry. Shot like we had 3 AR-15s, but like souped up AR-15s, like ridiculous, like $2,000 weapons, like each one of them. We had 2 shotguns, Scorpion, 357 Magnum, probably 7 or 8 like Glocks and H&K, like 40 caliber, 45 caliber, 9mm, and he even had a little 22 pew pew because my little son was my 17-year-old son was there. We shot a lot of stuff and blew up a lot of stuff yesterday. It was fun, and it was like
you were about to start a new war, right?
Oh my God. We probably went through, and I'm not exaggerating, we probably went through $1,000 worth of ammo yesterday between the group. I mean, I'm not talking just myself. I mean,
is the price of bullets still?
Yeah, it's still pretty pricey. Yeah, it's still pretty pricey. So, I mean, it's still pretty expensive. So, but it was fun, and I wish it wasn't raining yesterday because we were all shooting in the rain, because I would have taken video footage, but it just didn't happen. Okay, Sterling, let's write that down. Previous support, current resistance, and I know Steve gets all jealous about that because it is.
I do.
Definitely fun.
I do.
It's fun. No, and funny thing is, nobody there. No one is a hunter. Not a one that was there. We just all like to shoot firearms just to shoot them, not
just maniacs, basically.
Okay. Yeah. Just exercising our Second Amendment. That's all we're doing is flexing our Second Amendment.
Your index finger, flexing your index finger.
No, my right to bear arms. That's it. Still range bound. Aussie. This I pointed. I'm going to kind of go through this if you missed the week ahead video. So on the week ahead video, I was talking about this flag pattern that's developing, and it's still developing. But the flag pattern points to a move towards the 38% retracement, which I still feel is unfinished business to the downside in the Aussie. I really, really want to be long the Aussie at the long-term 38% retracement at 70.50. If this flag pattern plays out, it should take us there. And that is like, I've been hoping for that level to be a buyer for so long now. And I almost thought, I thought actually a couple of weeks back that maybe we weren't going to see it because of the big bounce from 71 cents. But looking at the current development in the Aussie, I think it is possible. So, the fact of the matter is, if we break this 72.10 level, then we should actually, you know what? I think it's below that. No, that's right. 72.10 is if we break through 72.10, then we're on our way. I'm going to keep it in range for now, but I do have a bearish bias intraday. Like I'd rather be a seller than a buyer. Right. As long as that 30, you know what? Actually, I'll take that back. As long as we hold above the 73.20 level, I think we have to stay bearish because that's the 38% retracement. So that is 73.20. As long as we stay below that, I think we have to flip this over to a bearish bias. It is a flag setup, and we may get this today, but if we may get that today, but I'll still be a seller on rallies, so it's possible. Kiwi, big support, still at this 50% retracement, which we'll write 69.80. And I'm going to put an asterisk next to that because I think if that breaks, then we have to flip to bearish. Okay. Resistance is going to be right here at 71 cents. Not much to do at the moment. Dollar Canadian. Now, keep in mind, guys, crude has been very strong. One of the things that's suppressing the dollar CAD. This trend line support will be really key support on the way down. So that comes in at 125.80. Okay. But if we, for some reason, break this downtrend line right here, it'll turn bullish, and that would probably coincide with a move lower in crude. That would be my opinion. That means crude's probably finally pulling back. But I look at crude right now, and I have a hard time, imagining that. I mean, we're still above that. We're above the 88% retracement, horizontal resistance. We're heading to the top of this range. So I don't think we should be looking at that with the dollar CAD right now. But if we break above 127, I think that does suggest that crude's probably peaked near term. Same thing here, 92 cents, 93.30 on the Swissy. Nothing's changed. 93, what'd I say? 93.30? Yeah, because that's a 618. Stupid dollar yen. At the 1 p.m. UK fixing, it just totally reversed. And I was looking at them like, man, maybe I should short it. And then I was looking at other charts, and then, all of a sudden, right at the fixing time, it like slumped. Amanda took some shorts up here. And I just wasn't paying attention. I was too busy looking at other charts at the moment. But the dollar yen might have been pretty key resistance for now. But I think while we're above 110.45, you kind of got to be real careful with shorts. But I'm gonna put in 111.
Especially with a 10-year yield having broken out as well.
Yeah, exactly. I would agree with that, Steve. And with the 10-year, pushing forward, I'm gonna put 05. Okay. And if we get beyond that, we automatically have to look at 111.66. So 111. I'll just put 65. Okay. It's the top of the range. I don't want to put bullish, but I'm just keeping that in range, but you guys know what it looks like. Dollar index. Look, this dollar index is pretty stout. And I think while we're above 92.95, which is basically 93 cents. I know we've been writing that down. I'm getting really close to flipping us bullish. This is the 88% retracement that comes in at 93.52, but it's basically 93.50. I think if we break above that, we have to turn bullish here. Dollar Mexican peso acting a little better today. Most of you guys know that I'm long. That trend line, well, I guess while we're above it. So we're above 21. As long as we stay above 20, I think you got to give it more of a bullish slant, but we have to break 2022 before I can really turn bullish. That's the 618 fib, if you guys don't recall. Right here. And I'm going to reiterate something really quick. And this is, and I know you guys kind of, I know you guys, some of you are a little newer, but I'm going to tell you some life experiences that I've had really quick in the markets. For many years, when we had volatility, you know, I have to kind of remove the last 3 or 4 years, because really, if you take volatility, you know, let's go over to a weekly chart of the VIX. Really, since I want to say about 2017 or so, these low volatility environments that we've seen in the market that have had like, if you look at the Euro vol charts, they've been really sub like 5, maybe 6 since then for the last like 4 years, right? Minus the few occasions you get some volatility spikes. Prior to that, prior to like 2015, 2016, it was commonly known that, and Steve could vouch for this because Steve's been around for years and he's listened to my webinars even before we were partners. When I'd go out of town, like literally, the market would melt down. Like the moment I left, I had this uncanny timing. And I'm leaving out of town on Wednesday, and I was joking about it in the chat room, but I'm kind of not. Like, and actually, just I want to say last year at some point, it happened again. I left, volatility spiked, and when I got back, nothing. It was like dead calm. The reason why I bring that back or bring that up is because I am staying long the dollar MEX, because I'm bullish, but also I think there's a good chance that I leave and, you know, we're going to get some silly news out of China or something, and the markets could move. It's just, I feel like the markets are really coming back, and that means that probably coming back to my really unlucky timing. When I leave, crap hits the fan. So just, I'm just kind of giving you guys some heads up, man. I'm just telling you, it was really quite bizarre. And those guys that have been around for a long time could really vouch for that, you know, like you talk to Rick in our chat room, he'll probably tell you that every time that I used to leave, it was like party time for everybody else. Everybody knew. And it was a like running joke. Key support for the US dollar Norwegian krona seems to be the 200-day moving average, but we can give it below that. You guys know I went long some, so I'm going to write down 850. 854. Brand said Blake is an indicator. I'm telling you, it was an inside joke. I mean, everybody knew. Everybody in our community knew. Everybody listened to webinars would know. Blake leaves.
You buy volatility calls.
Yeah, right. Steve, you weren't here. I was explaining to him.
No, I heard it.
Oh, you did? Okay. It's just,
I was here.
You know, it was weird, man. I mean, for many years, right?
Yeah, it was kind of funny.
Yeah. Funny for everybody but me. Because I would leave and I'd be pissed off because I'd get back and I'd be like, damn, I missed it all. You know, I missed it all. You guys know I've took that away from bearish because I think that we're in this megaphone pattern. Dollar MEX, we already talked about it. Dollar yen. Oh wait, we already talked about that too. Wait, what am I missing? Oh, gold, silver, Bitcoin. Okay, and then we're done. All right, so here is the S&P. We already know that. 885 support's going to be right here at 4025. Let's take a look at gold, silver, and Bitcoin. So gold still trading heavy here. We break through that 618 retracement, which is 1735. We should trade down to 1710. So I'm writing both those down. 1710, 1735. And while we're below 1780, we have to remain bearish. Right? 1780 right there. Silver. Boy, I'll tell you. 22 still holding, but 23 is resistance.
And 21 is the next downside target. So it's like very symmetrical.
Yeah, it is, isn't it? 21,
Yep.
22, 23. And while we're below 23, you have to stay bearish. And then Bitcoin, not surprisingly, is kind of consolidating here. So this might be more of a triangle consolidation. I think while we're below 45K, we've got to keep 40K on the.
I think the fate of Bitcoin is currently fully in the hands of risk assets. We see the S&P accelerating the downside. We're going to see the same thing happening to Bitcoin and Ethereum. Now, on the other hand, we see that we ended up having found a low last week. Let's say that was the case, then I wouldn't be surprised if Bitcoin continues higher.
I'm going to write 37K. All right, Steve, I'm going to let you take over. I'm going to leave the bias chart there. It's just like that. And there you go.
Stel, did you get it?
I got it.
All right,
Perfect.
guys.
Thanks, mate.
Thank you, guys. Hey, have a great one. And thank you all for your support and enjoy. I've got to go make my kids some breakfast.
Thank you, Blake. Thank
All
you.
right. See you guys. Oh, everybody forgot to say, yeah, Brexit happened while I was in Hawaii.
Yeah, true.
Yeah. Everybody in my office, in the Gelos office at that time, not in the Gelos office, and it was in the Spectrum Capital Management, which is basically the sister company of Gelos. Everybody that I traded with made a 6-figure number halfway to a 7-figure number that day, just so you know.
Nice.
Yeah. And I missed it.
Yep. Okay. Go feed your kids. So, okay. So, it's a quiet start to the week.
Indeed it is.
We're seeing equities kind of not knowing what to do. Actually, the Nasdaq is going low. What do we know what it's led by? Which stocks are leading it? I actually haven't looked.
No, I haven't checked, but it is indeed more than 1% lower on the day.
Yeah.
And for me, the vast majority of the indices are more or less on pivot areas because we had these ascending wedges, right? Here's the one in the Nasdaq. Here's the one is in the S&P. Here's the one in the DAX. And as you'll notice, there is a common theme here, is that the rebound so far has taken us very, very, very close to a retest of these broken wedges trendline supports. We didn't exactly test them as resistance. We came very close in every occasion. And we seem to be rolling over. And for me, this is the pivot area to see if there is more downside left, or we have already found the low. Now, admittedly, the way we're starting the week, and if it persists for the first few hours after we go into the live session, I think it points to further losses, right? And if that is indeed the case, then it is logical to expect that the dollar is going to remain rather decently bid, because we know that safe haven and risk of flows move firstly to the yen and the Swiss franc, and secondarily mostly because of being the first stop in liquidating, several of the assets that are around the dollar. So, it's going to be very difficult seeing the dollar pushing lower while we remain in somewhat of a risk-off environment.
Yeah, makes sense. Actually, Simon just wrote it's FANG stocks that are leading the way down. Nasdaq kind of makes sense. Thank you, Simon. Yeah, but for me, I feel I've been saying this again and again. I'm sorry, I'm boring and not saying nothing new, but for me, nothing has changed. Remember, we had the Fed, and some people got excited. Oh, he's dovish. No, he's hawkish. There was something for both sides, and I think they're telling us that they're going to taper and they're going to hike in after second half of next year. But it's a different story what they're going to do. So for me, nothing changed, unfortunately. And it kind of feels like equity markets, want to have another blow off top before they go lower. It just feels that way. But in any case, the stocks are kind of mixed today. Cryptos are doing nothing. Metals are trying a little bit. Yields are a little bit higher. It's like,
yields have broken out, actually, if we're talking about US yields especially. I mean, in my opinion, the 10-year
175 is really the level.
Is very clear. Yeah, but there is a clear change.
Yeah.
We've broken out of this triangle. If you want to look at the long end, here's the 30-year. If you want to look at this as a broadening formation, then yes, it hasn't broken out yet. Now, if we want to focus on, for example, this trend line, we've already broken out. So, depends on what you want to look at. But there is some movement going on here as well. Now, there is also the option of looking at this as a rectangle with, with this here being the rectangle's trend line support and this being the resistance. So we break through, what is it? 206, 207. In the case of the 30-year, we trigger this, which targets, let's see. $230 something. So yeah, 10 years seems to be more on the move for the time being, but let's see, because there is a big chance it's going to spill over. And of course, as I mentioned before, this is the main reason why we've seen this clean breakout in the case of USD yen. In my opinion, now, as long as we trade above these lows, let's say roughly 109, 109.20, somebody can be in the on the long side of this, looking for a retest of this previous high at 112.28, and above that, then the next target is above 114. So keep that in mind.
Yeah, makes sense. But for me, I look at things on daily and weekly charts. It's not breaking out yet. But let's see. What else? We talked about the German elections on FA.C.E. There's going to be coalition talks, which could get quite complex because it was a very close result. We also have potentially on October 1st, the US government shutting down. It's not going to shut down. So they're going to figure it out. They're going to raise the debt ceiling. Actually, no, the debt level, I like to call it. It's not the ceiling. And things are going to get rolling. They're still trying to.
I mean, everything around the debt ceiling is a joke.
It's
everything.
A joke.
Yeah, it's like a meme, right? I mean, let's begin by the first joke. We need to raise the debt ceiling to be able to repay our debts.
Yeah.
Just think about that concept.
It's
right?
like I need a bigger credit card limit so that I can pay my credit card. It makes no sense.
If you actually want to start repaying your debts, you don't need a higher debt ceiling, because by repaying your debts, your debt is shrinking. So you don't actually need to raise the ceiling.
Yeah.
Right. So the only reason for somebody to raise the debt ceiling is to accrue more debt. So how exactly are you paying your debt? By accruing more debt? I mean,
and how do you solve the debt situation, the debt problem? You have to inflate it away. That's what they've been doing for decades, and they're going to continue to do it. And anybody else who sees another end game, I think, well, I think it's not happening. But anyway, that's what's happening. And they're also still talking about the 550 billion infrastructure plan that's due to be voted on Thursday, I think. And there's a lot of politics played around that, and games and negotiations, blah, blah, blah. It's the same story over and over again. So for me, unfortunately, markets are not changed in any way. Currencies,
politics are just, you know.
Yeah, they are. Yeah. And currencies are still kind of range bound. Yes, the euro dollar is below 117, and we could see a little spike in the dollar, but this is for day traders, I think, not for me. Oh, silver and gold are going up now. I don't know what's triggering that. Silver is up nearly 2% now. We don't have any data. Do we have
silver?
Any
actually, a nice rebound from this intermittent trend line I have here. So that's why I agreed with Blake immediately that 22. I wrote it also in the weekend analysis that 22 is the first area of support. Below that, it's 21. A nice reaction from the 22 level for the time being, but we have to be very, very honest. In order for silver to actually technically turn bullish, I think at the very least we need to break through this channel trend line resistance, which currently passes from 2380. So until that happens, we should stay a little bit conservative with overly being bullish in the short term silver. I mean, there is a chance that there is more to go to the downside.
Yeah, I agree. That's why I'm not loading up yet. Otherwise, we talked about the infrastructure bill, the debt ceiling. Yeah, there's not much else. It's been a quiet day. Oil is still going. Goldman Sachs upgraded their forecast for year end to $90.
Oil is just oil and natural gas, just unstoppable. And I've told you before. I think we're going above 80, and we've been saying that for many months. I think it's not going to be a very long time until we see crude oil in the in the 3-digit area.
Yeah, I agree. Actually, you've been right about a lot of things. I think you're right about that too.
Natural gas, just look at this reaction. I mean, I thought we might get one more leg lower towards like 455, but it's just look at this in 3 trading days, just exploded higher once again. I mean, this market is so strong, so strong. It's very hard to fade this market. Very, very hard.
Wow, natural gas is about to take out previous highs, right?
Yep.
Wow. I mean,
like 3 days.
If that happens, then yeah.
Okay. Did you happen to talk, by the way, because I was late for FACE? Did you happen to talk about the petrol situation in the UK?
No, we didn't. My brother told me about it. He was out a few days ago trying to find the petrol station with fuel, and he found one. He was on a queue for like 45 minutes. It's terrible. They don't have enough lorry drivers. They don't have enough. Basically, the situation is very difficult for actually distributing it. So yeah, I hope that doesn't happen here.
It's also a combination with some headlines, in essence, causing panic, and that exacerbates the problem immediately, because if people think that they're going to be running out of fuel, then everybody, even people that don't actually need fuel, are going to run out to get fuel. And it's the same psychology behind bank runs, right?
Yeah, true.
Okay, anything else, mate?
No, that's it, my friend.
Okay, cool. So between all the talk about fundamentals, we did cover many of the things I had to talk about. Crude oil, natural gas. We just had a look at silver. We talked about USD yen and the 10-year yields, both of them having broken out. And, it seems to me that, the path of least resistance is higher in both cases. Now, what can derail somewhat that? The same thing that can, the same thing that can derail can change the direction of the dollar, as we said, which is what happens with risk assets and equities, right? So I already explained why I think that equities are in a pivot area. They move higher from here. Then I think there's a huge chance we've already found a low and the end of a corrective move last week. Alternatively, we turn lower from here. There's a good chance that we need at least one more low before we can complete like a proper corrective move. And if we have equities under pressure, that is going to affect more or less everything else. It's going to affect FX through safe haven flows, as I mentioned. It is definitely going to affect cryptocurrencies. There is a very big chance it's going to affect metals, and yes, there is a big chance it's also going to affect yields, because if we have risk of flows, then some money are going to run into bonds, which means that this rebound in yields might be put in a pause, at least temporarily. And the same, of course, with the rebound of the USD yen. But as I said, it's too early on the day, too early on the week. So let's see what equities do. For the time being, yes, we've had pre-market, we've had quite a decent move to the downside, especially having to do with the Nasdaq. But it's not going to be the first or the last time that we will have seen pre-market, the market being rather bearish, and then the market actually opens, and suddenly nobody seems to care about anything. Overnight sell-offs are being completely retraced, many times even closing strongly positive. So let's wait for the next few hours before we can draw any conclusions here. Let me see if you have any questions. Hi Blake, really enjoyed your interview with Shy Girl. She thought $75 would cap the rally. Hope she's right and we turn soon. Catherine, Tracy is amazing, and she's all over the energy market. That's what she's been doing her whole life. And with all respect, I still believe that crude looks very, very bullish, and I would be very skeptical about assuming that this rally is going to be capped at $75. I think it's a lot more likely that we're about to break to new highs and push north of $80. So my personal viewpoint here is that she's probably going to be wrong, at least from my viewpoint. I mean, she's usually right about crude oil, etc., but in this case, I don't really see it. I don't. Rick says that we all looked forward to your vacations. True. With Bitcoin, BTC or cryptos fall because the USD is worth. I don't understand the question, Bran. With BTC or cryptos fall because, did you mean will BTC or cryptos fall because the USD is worth less? No, theoretically speaking, it should be the exact opposite. Theoretically speaking, dollar going lower should be Bitcoin priced in dollars going higher, right? As simple as that. But it's not as simple as that, meaning it's not the only factor that affects the price of Bitcoin or any of the other cryptocurrencies. In my opinion, the strongest relationship you should be aware of is that cryptocurrencies are the riskiest of risk assets, and they are a lot more likely to sell off when we are in risk-off conditions. Because one of the first things that people are going to liquidate, and I'm talking about institutional investors here, not fanboys that live in the basement of their parents and have everything they own, which isn't much in cryptocurrencies, these people will never sell them, most likely. But I'm talking about like smart money, big money. They're going to be selling cryptos first in case things start going south, having to do with risk appetite. So keep that in mind. Stelios, Fang, Amazon, Netflix, Microsoft, Google, Apple, Facebook, and Nvidia. Let's have a look at a few of them, since you mentioned it, Simon. I'm curious to see how much of a move lower they've been having. Let's start with Apple, which is like huge, as we all know. Yeah. Okay, it has a down day, but admittedly, it also had like a. Let's see what we have here. Yeah, if this is a bear flag, we're just breaking down, right? We can see an attack of the 200 DMA afterwards. Let's see Amazon. Oh, haven't had a look at this for quite some time. Let's see, so we broke out of this rectangle. We stayed above it for some time, but we never managed to fulfill its target. And we're back within this rectangle. Not a very bullish behavior, right? But on the other hand, it's not like it looks horribly bad. 31.75 is support and 35.50 is resistance. We're more or less in the middle. More or less this looks neutral. Let's have a look at Netflix. Netflix has either broken above a pennant, which is a bullish development, or perhaps there is a bigger formation here, like this flag, and we haven't yet broken out of anything. There is that chance, but definitely doesn't look bearish overall, right? You can say why. So for the time being, I see nothing bearish with Netflix. Let's have a look at Microsoft. Same thing with Microsoft. I see nothing. Oh, that's Morgan Stanley though. Microsoft. MSFT, yes. Yeah, I don't really see something bearish here either. I mean, yes, it's not trading at the highs, clearly. We are in some kind of a consolidation, but really no damage to the uptrend yet, right? Some divergence is also, I need to note those, but nothing major yet. I mean, nothing that constitutes like a breakdown or whatever. Google. Yeah, some kind of a minor pullback, but nothing spectacular. All of them look like they're just consolidating like the previous gains. Now, admittedly, Facebook and Apple look worse than the rest, admittedly, right? Admittedly, the two of them look worse than the rest. So between how many of them we had a look at, like 6, 7, I think that Apple and Facebook, if you want to be short, are your best bet, technically speaking, at the moment. This might be some kind of a little bear flag as well, as we saw in the case of Apple. JPM trying to break at all-time highs. Let's see. Very, very true. And it's not just that. We haven't had a look at this for a long time, by the way. It's not only that. There you go. It's that we have a very clear formation here, which also gives us a very clear measured target, right? $189. There you go. Nice rectangle, nice consolidation. We break above that. You know, you want to be short for some reason. This is where you short it. But I have to tell you that, you know, your chances are not that good, right? Obviously, you just have the risk reward going in your favor, nothing else. We break through this 160. What is it? 167, 168. And we're going to find ourselves at 190 as the next measured target. So keep that in mind. XLF as well, big breakout possible. Audio has gone.
No, it hasn't. I can hear you.
Okay. So can you type to him that audio is fine? Please tell.
Sure, sure.
Okay, XLF. Let's have a look at XLF. XLF. Yeah, as you see, a very, very similar picture here, right? Very similar. Not exactly a rectangle, like an expanding triangle, right? But still, you can consider this a corrective consolidation, right? So this can work in one of two ways. With, you know, clearly the path of least resistance being higher, right? That's more than obvious. FNMA, is this the one? Because I can't really make much of it. Is this the one you were referring to, Alan? Okay, can you give me the exact? Fannie Mae, okay. Let's see, Fannie Mae. Yeah. Yeah. Some divergences, some bullish divergences here, but other than that, this looks really, really bad, right? Yeah. Yeah, it looks really, really bad. Not what you want to see if you want to be bullish. Just a, you know, non-stop drip lower. And prior to that, we had like some massive moves to the downside on occasion. I wouldn't be touching this, I can tell you that much. My pleasure. Anything else? Ladies, gents, anything else you want me to look at for you? Okay, then. So
All right.
have a wonderful rest of the day, and I'll talk to you again tomorrow. Bye-bye, Stel.
Thank you, Steve. Thanks, guys.